Hi, I'm Aaron Newworth with ETF Trends and ETF Database. I'm joined by Mark Carlson, Senior Investment Strategist at FlexShares Exchange Traded Funds. How are you doing today, Mark?
I'm doing good, Aaron. Good to be with you.
Good. Let's get this thing going. July's Federal Open Market Committee recently concluded. Mark, what are your takeaways from the Fed announcement and Chair Powell's press conference?
Well, Aaron, I think the main takeaway is that the committee and Chair Powell have set up the timetable in which they're looking to study the remaining data and then potentially begin to indicate for tapering of asset purchases, those being treasuries and MBS, by beginning at the September FOMC meeting, maybe leading to some discussion of it or laying some groundwork at the Jackson Hole conference in late August. But more importantly, I think they were successful in laying the groundwork that the timetable is now looking at an announcement in September for potential tapering, either beginning later in this year or early 2022. It was interesting, though. A couple of the other takeaways from it is that we finally got some kind of definition of what transitory inflation is. Chair Powell said it's when inflation stops increasing. So that's when that stops, whether it's by its own fruition or if the Fed needs to take actions, they consider that to be transitory. Important, though, the chair indicated that they don't see, this is not an indication that prices will decline or that there'll be some retracement of the inflation that has been created in the post-COVID environment, mostly by the uptick in demand from the reopening of the economies and then the supply constraints we've met. But that's just simply that the inflationary pressures will begin to grow at a slower rate or something more that we've seen in the past. The other important indicator we got out of Chair Powell and the presser is that pretty much the committee still believes that they are a long way away from reaching their full employment goal. And so that's an important indication in terms of not so much the tapering of asset purchases, but more so for the prospect for raising interest rates going forward, so on the short end of the curve. So I think their action there was to make sure that the short end of the curve remained anchored, where the tapering of asset purchases is going to impact more of the intermediate to the long-term part of the curve.
Well, which market do you view as being the most impacted by committee's July guidance?
Well, today we definitely saw it in the TIPS market because with the inflation guidance, we saw a backup in inflation expectations in the TIPS market. And specifically, I'll point to the fact that we hit an all-time low in the real rate for the 10-year at minus 118 basis points. And so clearly the market is anticipating a continuing of the inflationary pressures, at least in the near term. The one index that I look at very closely for longer term inflation expectations is the TIPS five-year forward inflation break even. So that's where the TIPS market is saying, okay, let's look ahead to 2026. And what is the market anticipating for 5-year inflation 5 years from now? And that's really an indication of more of the structural nature of inflation in the economy versus what we're seeing right now, which is the supposed transitory being driven by supply shortages and excess demand. And that measure really did budge that much from the impact of today's meeting. So it really is an impact of inflation expectations in the 1 to 5 year type of time frame. So again, this is the economy working out the impact of the COVID-19, the stimulus that's been created, and then the return to a normal economy along with the supply demands.
Mark, why is the Kansas City Fed's Jackson Hole conference so important, and what are you expecting from this year's conference?
Well, in the past, the Jackson Hole conference was one where they kind of laid out what their thinking agenda, and the Fed keeps on board. You hear the number of economists and researchers that they have. They have over 500 PhDs at any one point in time, economic PhDs who are doing research, and obviously they have access to an incredible amount of data. And so you're always wondering, what are the members of the FOMC? What data are they looking at? What are their researchers telling them? And often that is indicated in some of the papers and presentations that occur at the Jackson Hole conference. This year, I think it's probably there's not going to be any major breakthroughs, but it will be interesting to see if they've started any research on some of the connections between employment benefits and employment, or the nature of the return to work versus the virus, or versus other impacts in the marketplace. It may be a little bit too early for that, but at least we want to see some indication of what data they are looking at that are informing their decisions for, say, full employment, and for what exactly is transitional, transitory inflation data. But really more important, I think the key to this year's Jackson Hole conference is not to spook the markets and to set up for the potential for the late September FOMC meeting to provide the market with the guidance for a potential taper, and for further guidance on if and when the FOMC decides to raise short-term rates.
Great. Well, thank you, Mark. As always, we appreciate your insights and look forward to chatting again soon.
Thanks, Aaron.